All right, it's options expiration. We got pin action. What is it and why does it matter? Let's go.
This is Dan Max at eXp Realty, aka the Trading Agent, and this is my stock, Bitcoin, gold, and silver daily market recaps. Please subscribe if you like what you see. Thank you.
This is Dan Max at eXp Realty, aka the Trading Agent, and let's do a little video on options expiration about pin action. If you don't know what pin action means or what I'm referring to, we will get into it, but it's pretty simple. It's when the market makers and the specialists try to pin a stock to a certain price at the end of options expiration. So let's dig into it deeper. And the first question I typically try to involve with this is, so people understand it, is like, why? Not the what is it, but why does this action happen? Well, as someone's been in finance and the industry for a long time, the goal of this is the market makers, the specialists, the people who are taking your bets in the market, they want the price to pin at a certain price. They want the price to be pinned to a specific area or price so that they can kill off as many options as possible. And when I say kill off as many options as possible, I mean as many options be worthless when the expiration expires. So if you think of it like this way, like they're a bookie taking bets on both sides, and they want the most amount of people to not be able to cash in. And one of the reasons is, again, they are taking the bets. So let's get into, with say SLV. So silver SLV, you look at the chart, when you look at relative to gold, I think it would be higher. But then if you dig into the pin action on the options, it makes sense why it's tied to the 22 area, because the market maker right now would like to see that much lower. And when I see not much lower, but at a price that is not going higher, you'll start seeing why. So when you want to look at the pin action, options expiration, pin prices. Now, again, this isn't always perfect, because sometimes what can happen is the last couple days, like usually by the Wednesday before options expiration, the market maker kind of knows where they're at. And so, but there are times where, say, with Wednesday going into options expiration on a big expiration, which is the third Friday of every month, they might take all the calls. Say like a stock is at a certain position and everybody dumps their calls because it's not going higher. Well, then they clear those calls out and they might actually run the price up a little later. It's really interesting. So let's get into it. Now, if you look at the call action on the SLV, so this is February 18th, so this is expiration day. Here's open interest and volume. The open interest is what is being held in the sense of like the amount of options that are open, and the volume is today's volume of like how many buys and sells. Applied volatility, percent change, all that stuff. Don't worry about it. So if this is the open interest and this is the volume, notice at this point there is not much strike act, like there's not a lot of open interest until you get to the 22 calls. And look at that, 34,850, 47,000, and 41,000 at 23. If you are the options maker at this point, just by looking at this information, what would you want the price to be at to get the the most amount of people to lose their options, like, or not make money on their options and not want to exercise them because they're out of the money? If you're thinking it, and if I'm explaining it right, hopefully it's very obvious. It's the 22 level. The options maker want the stock as close to 22 so that these strike prices at 22.50 and 23 expire worthless. These options are going to expire worthless today. And at any point in the past, people probably paid $1, $2, 50 cents, who knows? But if you think of the premiums that the market maker has collected with the open interest as high up here, that's all money that they're going to keep. Anything now, again, and if it closes at 22.05, think about the options. Someone may have paid $1, $2, 50 cents. If they have to pay someone 5 cents out, they don't care. But all these options a little lower, again, look at the volumes. They're minuscule. So you look at the calls and we see, okay, clearly the market maker does not want it over 22. And then now you have to look at the puts. Well, what do you notice? The put action here, right? 22.50. So to kill the most amount of puts, think about, look at the highest open interest is right here at 22.50. You're going to want it to close between 22 and 22.50 because it will minimize the amount of premium, or it'll maximize the amount of premium that the specialists and the market maker are going to keep. And it's pin action. They want it between 22 and 22.50. Now, again, you can look at this during the month as the stocks is moving. This will change, but I like to look at it occasionally just to see if I see a stock that's not acting right. This might be the reason. The pin action. The market maker literally has an incentive to keep this between 22 and 22.50 by the expiration of today. Because if that's the case, all these puts will be worthless. There's not really any higher. And then look at the calls. All of these calls are going to go worthless. Those calls, man, there's a ton of calls. Think about it. If you do the math there, that's 150, I don't know, about 100. Yeah, exactly. So you got 45 plus 35, multiple hundreds of thousands, 200, almost. God, man, my brain is just not that good right this morning. I mean, 13. I mean, if you can get 160,000 options to expire worthless, think about what's in the money here for put wise. Okay, there's some puts here, yeah, but you don't know where they are bought, and so those premiums don't matter. And then look below here. Come on, let me unhighlight it. All of this is nothing compared to the 150,000 puts and calls that are in SPY worthless. They can manage this volume. I'm going to pull up something and do this on the fly because I have a feeling this is going on with letter X. I have not pulled this up and done this. We're doing this on the fly and recording for fun. Letter X. I have said wait for the breakout. Notice what's happened. Every time it gets up towards 25, did it get stuck? Yes, it has gotten stuck. So let's look at letter X's US Steel's strike price. What's going on? Let's look at the pin action. Okay. I'm starting to, again, notice the flow here. More calls above this level. Where are all the puts? And there is the key. The puts. Look at that. 6,000. Now, again, look at everything through the lens of relative amounts. If you're the market maker, you do not want this below 24. If you're the market maker, you don't want this above 24.50. Well, what's the sweet spot? It's clearly 24. So here's another example of pin action. And again, I'm just doing this on the fly, but I've done this a billion times. So I hope this helps. Because again, think about the casino. Like the casino is the market maker and the specialist. They are taking your bet. When you buy options, again, remember, I like to sell options. I like to be the casino. I like to play the dark side on the craps table. The market maker, you are paying them a premium when you buy an option. So they have every interest to work with the market makers and the specialists to manipulate the price action so that ultimately you and I lose who are buying options. And when I say lose, like they want to pay out the least amount of options. Because keep in mind, if an option is in the money at expiration, they have to give the stock over to the person. So for example, to the buyer of the option, say we have the 22 calls in letter X. Well, at the close today, who knows what premium we paid, but we're going to get the stock at $22 a share. We'll add in our premium that we paid for the option. That'll be our cost basis, but we're going to get that stock. Makes sense, right? Well, think about it from the perspective of the market maker. They don't want to pay out. They want to pay out the minimum amount of bets. Just always keep that in mind. Like, this is a fucking casino, and excuse my language, but if you're not thinking it from that perspective, like, the game was created in bucket shops. This was a gambling game turned into a stock game, and the stock game is still a gambling game at heart. So just always know that. So I hope this kind of stuff helps. If you have more questions, stop by the Discord room. Leave a comment. Please smash the like button. Smash. Any help to grow the channel. Again, because I think there's a lot of people who are coming on and have questions, and more people than not have experience. But check out these educational videos. I try to break it down to help, answer those questions so you don't have to ask individually. But also, too, if you have other questions, I'll just do more videos, too. I don't mind doing that because I know there's a lot to trading. I mean, I think there's 35 or 40 educational videos at this point, and probably when it's said and done, there'll be hundreds. I mean, that's just the nature of trading. Like, it's going to change, too. We have to evolve. So I hope this helps. I'll talk to you guys and gals.
Thanks for watching. For more trading knowledge and insight, click on the videos on the right, and also join the Discord room. Link is in the description below. If you have any questions, please stop on by the Discord room and let's chat. Thank you.